For example, if you are buying a house, you like to buy a house in a neighborhood where prices generally continue to go up as compared to a neighborhood where prices are really all over the place. Some days are up 10%, the next days are down 10%. It's the same way with stocks. If you're trading the optimal strategy, you like to trade in companies that are around the bottom part of a range they typically trade in. That way it's more likely that a stock will go in your favor or go up. Let me show you how to do that. Here you see 4 charts of KR about the time that we entered those cash cap put options I showed you at the beginning of this video. That was around the early part of January. As I zoom in here, notice what had recently happened to the daily chart of KR. It recently broke out above both the green 50 and red 200 moving average on this daily chart. That's generally a bullish sign. Now looking over here at the bottom right chart, the weekly chart, notice over the past several months, it had been finding support right around this red 200 moving average on this weekly chart. Well, that moving average corresponded to the level of right around $42.50 per share. That told me that if KR did come down, although my $45 and $44 cash cap put options would possibly be in the money, it most likely find support around that $42.50 price point. So I knew I had the technicals lined up in my favor. In addition to that, I also saw that KR was coming down and testing that area that had previously served as resistance for it. That resistance area was right here at this red 200 moving average. Notice it found resistance right here towards the middle of December, again back in early December, then also back in November, just to go back a few months. Remember that resistance, once broken through, tends to turn to support. So KR was approaching an area where I expected it to find support. One of the reasons why technical analysis works is kind of ironic. The reason is that a lot of people believe that it works because it does work.